Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Carin, Executive Vice President and Head of Portfolio Management at Fiduciary Trust International. Carin, thank you very much for joining us. We've talked a little bit about the macro picture and how the Fed looks more likely now to cut in September. I think that's what the market is expecting. Have you been sort of keeping tabulations of the speakers, both a little on the hawkish side versus those on the dovish side? And what do you think we see in September?
Sure, Brian. Thanks for having me. And I think that right now it is a little bit difficult to predict. It almost seems like the market is definitely looking for a rate cut in September. Those odds have been increasing over the past few weeks. And I think the data probably supports that in terms of the economy showing some signs of continued slowdown. Not weak data, but I think, generally somewhat weaker data. You see that in the labor report, and you also see that in terms of some of the slowdown in terms of things like oil demand. I think that some of the combination of less inflationary pressure along with a slower economy probably does lend itself to the Fed having, the potential room to cut.
So we can talk a little bit more about monetary policy, but I wanted to get your take on earnings. We're getting pretty close to the end of this latest earnings season. What sort of grade would you give to companies?
Sure. That's a great way to put it. I think generally speaking, we had a fairly solid earnings reporting season. In fact, we still have the majority of companies surprising on the upside when it came to earnings. And I think as we started the earnings reporting season, the surprises were coming in a little bit on the lower side compared to what we've seen historically. But as the earnings season progressed and we started to see, a greater percentage of companies report, and now that we're almost through the earnings season, earnings surprise has actually been pretty much on track in terms of about a 5% surprise, which is, I think, a pretty healthy number relative to expectations. And I think that for the most part, companies' guidance was also generally positive. And we had a 45% of companies suggesting raising their estimates or giving more positive guidance moving forward. So I think that generally speaks well in terms of the outlook.
Yeah.
I think some of the themes, yes. Sorry.
Well, I was just going to say, of course, the market has been very positive. So would you say that the market gains have outpaced the actual earnings gains? And if so, what does that tell you about valuations?
Yeah, I think you hit that right on the nail head there. We definitely continue to see some multiple expansion contributing to stock gains this year. Particularly, we saw year to date a continuation in terms of the multiple expansion in the technology stocks. Those stocks have been contributors or largest contributors to earnings growth. So, for example, technology's earnings growth this quarter was around 28%, which is far outpacing roughly the 5% growth from the rest of the market. And so many of those stocks garnered some pretty high valuations before the correction. And now we're seeing, some of that rebound in valuation again. So in many ways, I do think that there are some concerns about valuation in segments of the market that may be a little bit overextended, and investors have to pay attention to valuation. And I think that there is definitely a lot of room to differentiate stocks from a valuation standpoint.
So a lot of people are talking about how important NVIDIA's earnings are, but I wonder whether, I think we know that NVIDIA is going to do very well with its earnings. We haven't heard any warnings or any surprises, and the hyperscalers have been, they've been over ordering almost. But what's curious is that doesn't really tell us too much about monetizing and sort of downstream action like gains in productivity or such. Have you seen signs that this really is a mega theme that is going to bear a lot of fruit?
Yeah, I think that's the $1 million question right now. And certainly there were a lot of questions around that theme during the earnings season. And I think that the uncertainty or just the fact that investors are questioning that led to a little bit of a shift in narrative for a while in the market. And that contributed to the correction that we saw recently. Even though, we know that there was a lot of technical factors that contributed in terms of the unwind of the yen carry trade. But I do think that investors are starting to question whether the rewards of AI investments are going to yield positive, earnings or positive revenue growth for companies. I do think that, when it comes to AI and some of the stocks that are geared to AI, that's important for investors to decipher. And I do think that we are starting to see some signs of potentially some slowdown from very, fast paced growth within AI and technology. We do expect the pace of investments to slow down as we head into, the latter part of the year. And we would expect that other parts of the market start to contribute more to earnings growth for the market. I do think that
Let's do some quick hits on Asia, and I want to sort of bridge the gap by saying that Citigroup came out and said that the carry trade is back, but it's with dollars now, not with yen, which is kind of interesting. I suppose that tells you that they think that the dollar likely weakens from here, but I haven't actually checked what they're saying officially about that. But the whole idea is that the Fed is likely to be into a round of cutting rates, and so you might see the dollar pull back a little on that, whereas the BOJ is talking about hiking rates, at least to a certain degree. What do you think about that kind of trade, and what's the implications for emerging markets?
Sure. So first, I'll preface by saying I'm not a currency expert, but we do have to watch these technical factors and what's driving the market, and it definitely plays a large role in terms of the market. I think the liquidity factor is the more important factor. And I think that the fact that the BOJ was talking about potentially raising interest rates is what caused the technical sell-off in the Japanese market, Asian markets, and also the U.S. market, which has been quite levered to the yen carry trade. So, I think going forward, monitoring what's happening in terms of the foreign markets is an important factor as we think about the liquidity factor and how it would potentially tighten credit around the world. I mean, I think it's not just emerging markets or Asian issue. It has huge implications for the global financial markets. Yep. And when you see tightening in any part of major economic markets, it would have reverberations even in the U.S. market.
All right, we've got to go, unfortunately, but thank you very much. Carin Pai with us, Executive Vice President at Fiduciary Trust International. Henrietta Treyz, Managing Director and Director of Economic Policy at Veda Partners. Henrietta, Kamala Harris has dramatically improved her position over the past many weeks in the polls tracking voter preferences. Before we get to some of the latest developments, just in the broad overview, what has led to those changes for her?
Thanks for asking, and thanks for having me. She is up 5 points nationally on average, which is no small feat since jumping into this race. A lot of her gains are coming from third-party voters. So for those watching the polls, RFK Jr. has dropped substantially in the last couple of weeks, and most of his supporters have picked a major party candidate, either Kamala Harris or Donald Trump, but disproportionately, they're trending towards Kamala Harris. So now he's down to about 5%, which is why the Trump campaign is trying to get his final 5% of voters over to their camp, and there is speculation that he might endorse Trump in the days ahead. But the youth, minority, female, moderate voter trend is all towards Kamala Harris. And she is doing pretty well with all of those demographics right now. And that's where a lot of her gains have come from in the polls thus far.
I get it. And, we stated that she's made that improvement. But I'm really curious, what is leading to it? Is it that she's more youthful? Is it that people are souring on former President Trump? Is it her position on certain policies? I don't think so. What is it?
Her positions on policies are the exact same as we've seen from Democratic presidential candidates since 2008. President Obama rolled out the 28% corporate tax rate in 2012, if I'm not mistaken, maybe 2010. And that's basically been the Democratic platform ever since. So it's not like she's reinventing the wheel. What's happening is she is bringing folks who were not enthusiastic about Biden into her camp overwhelmingly and giving a lot of the 2008 enthusiasm to the Democratic Party. And then let's not forget that the big reason that Joe Biden won was because Donald Trump was wildly unsupported by the majority of Americans. He hasn't won an election since 2016. The Republican Party has underperformed since 2016. And that's largely because the opposition to Trump is so galvanized and enthusiastic that they'll go to wherever else they can find.
Let's do some quick hits here, because we had the Harris campaign adding some of these prominent Obama leaders in senior roles. David Plouffe, for instance, who ran the campaign back in 2008. Others like Stephanie Cutler and Jennifer Palmieri. What's key there?
Yeah, they're definitely trying to recreate and continue the momentum that Democrats felt in 2008. You can see it from their electoral college map. When you think about where Kamala Harris is focused right now, it's less on Pennsylvania and much more on North Carolina and Georgia, states that Joe Biden and or Obama were able to win in the last decade. And it's less focused on Pennsylvania specifically. So it's a different trajectory than you would have seen under Biden. And they're basically calling for that campaign play. If you want to make a sort of football analogy, that's the route that they're running.
Okay, I wanted to get 30 seconds on Joe Biden's speech last night. We carried it in its entirety here, and we summarized it afterwards. It was a pretty vigorous speech. It was a combative speech. How did you read it?
Yeah, absolutely. Very vigorous. Started late, reflecting the enthusiasm that folks are feeling in Chicago this week. You can see it on display right now if you're watching the DNC. The idea is to perpetuate this galvanization, voter turnout, volunteerism. I think it's particularly well displayed across fundraising numbers. The Harris campaign has generated more than $500 million in the weeks since she has taken over the candidacy. Wow. And that compares to a $36 million take home for the RNC last month. Yeah. So the disparity, the starkness is really quite striking. And I think Joe Biden is the one to receive credit for that. This is sort of a swan song, as everybody's been putting in. I think that's very apt.
You mentioned that former President Trump, doesn't resonate with the entire country. We just heard him talking about, he calls all Democrats Marxists and communists. When people hear that, do they just think, oh, that's Trump? Or, do they believe him?
Well, it doesn't really matter what everybody believes. It matters what independents believe. Yeah. They are the ones who decide an election. So, 97% of Democrats are going to vote for a Democrat. 97% of Republicans are going to vote for a Republican. It's the independents on the in-between, which is why I stress that in my notes right now, and is why Biden won his race in 2020 and Obama was able to win his in 2008 and 2012. The only Democratic candidate to lose the independents by 2 points, if I'm not mistaken, was former Secretary of State Hillary Clinton. So what you're looking at right now is Kamala Harris swaying independent voters. So when Trump says that Democrats are communists or Marxists or whatever, he's failing to convince the people who decide the election, which are the moderate wing of the American electorate, the independent wing of the American electorate, which in critical swing states like Nevada are huge majorities, or pluralities rather, with 35%. So
you're lucky we ran out of time. I was going to ask you if Kamala Harris's price gouging comments mean she doesn't support free capitalism. We'll have to save that for another time. I know it's not really the case, but anyway, thank you so much, Henrietta. We always love it when you're on. Henrietta Treyz from Veda Partners. Brian Curtis along with Paul Allen, and joining us now on the program is our colleague Paul Dobson, who is Bloomberg Executive Editor for Asia Markets. So we've got the Fed, we've got NVIDIA's earnings coming up. We've had something to reflect on what happened with dollar yen and such, and that seems to have cleared a little bit. Paul, what's number one issue at the moment for you?
Well, I think that all eyes and all focus will be on what we hear from central banks at the end of the week. First of all, we have testimony from the Bank of Japan's Ueda in Parliament on Friday, and then Friday evening Asia time, Friday morning in the US, we will hear more from Jay Powell of the Fed on the interest rate policy. And I think that the market is going to be paying very careful attention to what sort of a signal we get on interest rate cuts from the Fed. The market is already moving in advance in anticipation of the idea that the Fed is going to be talking about starting cutting interest rates in September and maybe continuing on a cycle of cuts in coming months as well. And we're seeing that in our markets really very clearly reflected in a weakening dollar and a big rally for Asia's currencies. We're, pushing very high in Southeast Asia on a number of different measures. Here in Singapore, we're close to the strongest level since 2018, for example. And also, it's causing inflows into equities markets and into bond markets at the same time. So that weaker dollar is really starting to sort of ripple across the rest of Asia. Now, the danger, of course, is that the yen also rallies, and what we saw previously a couple of weeks ago was a big rally in the yen, upended everything in the rest of global markets because of the carry trade and the unwind that caused. So that's something to watch out for, and that's why both the Bank of Japan and the Fed are worth paying a lot of attention to right now.
Yeah, so markets positioning for an outline of easing from the Fed. What if instead of that we just get a big speech about data dependency, because that's happened before?
It has, and you could count on Jerome Powell to try to say as little as possible that would cause ripples in the market. On the other hand, Jackson Hole is historically a place where the Fed does like to sort of preview or telegraph shifts in policy, and all of the data now seem to be supporting the idea that the Fed will be moving in the direction of cutting interest rates. If you look at inflation measures that we've seen over the past couple of weeks, we had a miss on the PPI, I beg your pardon, and then weaker CPI as well. And so that really gave the idea that it'll be okay for the Fed to cut, even though the rest of the economic data shows some resilience. I think if Powell were to just, sort of like talk data dependence, with no indication at all that there's a closeness or a nearness to cuts, then the market might take that quite negatively.
Yeah, the problem with data dependence is that there's a lagged effect in the rate hikes that they've had, and there's such a huge gap between where inflation is now and where it was before. And with the Fed funds rate at 5 3/8%, some people are worried. And we also had this revision in U.S. payroll growth, and it looks like you could have 500,000 to 1 million fewer jobs than we thought we had, and that might further stoke some concerns that the Fed's behind the curve. How are you reading that?
I think that's going to be a really interesting data point to watch out for. I know that particularly Bloomberg Economics has been talking up the idea that the labor market is weaker than the headline data might suggest. On the other hand, the rest of the economic data does seem pretty strong as well. The retail sales, for example, are still coming up in favor there. So to attach too much importance to that backward-looking data without being aware of the kind of current situation might lend something of an overreaction. At the moment, the market doesn't seem to be thinking that the Fed is behind the curve and there's going to need to start with a 50 basis point cut based on what's priced in at the moment. If it were starting to really worry about the economic slowdown, then of course that could lead to a faster shift down, and then all of those trades that we're talking about, the weaker dollar, lower bond yields would accelerate most likely.
Yeah, the weaker dollar narrative is really getting embedded now. Which currencies, particularly in Asia, seem to have the most upside at the moment?
Really good question. Markets like Southeast Asia in general, we've seen big rallies. Malaysian ringgit led the way, and now catch up with Thai baht, for example, even Philippine peso too. I think in major markets, so the places where there's a bit more caution is the yen, because of the fact that the rapid moves we saw there already were unsettling for global markets. But basically, anywhere where interest rates are likely to stay higher for longer in the sort of dimension, or in the situation where US rates are coming lower. So Australia, for example, where the central banks have been talking about wanting to keep interest rates up for longer, should see currency benefit, and maybe against New Zealand's dollar as well, where we saw the cut the other day.
Interesting story that moved within the past couple of hours on the terminal about the Japanese stock market when it had its worst selling that we saw just recently. Foreign investors were selling futures pretty heavily, but they were buying cash equities. And summing up that, our story says that that's a sign that stickier money hasn't lost confidence in the market. What's your take now on the conditions in Japan and where we're going, both in equities and the yen?
I think it's really interesting. I think so much is dependent on the yen that it's hard to separate the two at the moment. However, on a currency hedged basis, so if you take the yen out of the equation and you're a US buyer of Japanese equities, you're still neck and neck with the performance of US markets year to date. So there's plenty of reasons to like Japanese equities, even if you take away the sort of potential for the yen to weaken and help you out further. I think part of that is that we're seeing finally some growth, in the most recent GDP numbers after quite a long period of stagnation, and also retail sales, the consumer picking up again, which has been giving companies something of a boost. One of the big concerns is whether the companies have pricing power, if they can continue to raise their prices without scaring off consumers. It's that whole cycle of higher wages leading to higher prices and so on. And right now, it seems that is possible, and that the consumer is still there, and that wage growth is continuing to push through, and so that's quite a positive sort of underlying story for parts of the Japanese market. I think that the other thing to watch out for, is also the banks, which benefit from higher interest rates. So if the BOJ does continue to signal higher rates in the future, then that should benefit another segment of Japan's market as well.
Just very quickly, Paul, we've also got CPI numbers at the end of the week from Japan. 30 seconds. What are we looking for?
Well, the market will be expecting that there's still some strength in those numbers, and that the BOJ will be able to continue hiking. Too strong numbers, though, is the danger here. I think at the moment, too hot, too cold for the US, too hot, too cold for Japan. That could start to unsettle markets again and see some pretty sharp moves in the currencies.
All right, Paul, thanks for joining us. Paul Dobson, Bloomberg Executive Editor for Asian Markets. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.